Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through the weekly roundup of D Street, how we fared in this week, and what is to watch out for the next week. But first up, let's take stock of how we ended this week. Well, Nifty has touched is the 3-week low intraday this week, down almost 1%. Mainly dragged by Eternal and Adani Port. Adani Port was also the top sector, was also the top Nifty loser in today's trading session. Nifty mid-cap also snapped its 2-week gaining streak, dragged by Cochin Shipyard and Paytm that was dragging down the index. Nifty small cap also snapped its 4 weeks, gaining streak, dragged down by Angel One and Incon International. Also, Nifty Realty was a top sectoral loser, snapping its 4-week gaining streak. Brigade Enterprises and Shobha were leading the losses in this week. We also had Nifty FMCG that hits its 2-month low intraday this week. Nifty Bank touched a 57,000 mark for the first time this week, but closed in the red, snapping 4-week gaining streak, dragged by Canara Bank and PNB Bank. Now, Nifty IT was only the bright spot in the market this week. Nifty IT was the top sectoral gainer, snapping its 3-week losing streak. Oracle Financial Services and Tech Mahindra were leading the gains from the front. So a tepid week coming in for the market. And besides that, the other things that made news was the fact that the US-China, trade deal went through, and on the back of that, we did have a total of 55% tariffs that that came through, where China is getting 10% tariffs, which means that US will charge 55% tariffs on imported Chinese goods, which is crucially including 10% of baseline reciprocal 10% on China's goods that they are going to import, and which includes 10% baseline reciprocal tariff and a 20% tariff for fentanyl trafficking, and a 25% on reflecting the pre-existing tariffs that they had imposed. So that's the deal that came through. And as far as the other counters that were in focus were Eternal, Jubilant Foodworks, AB Capital. They were also in focus on the back of big block deal that came through on these counters. We also had the inflation data, CPI numbers that came out this week, where India's CPI number cooled off to a 75-month low, coming in at 2.8%, which is well below the tolerance band of the RBI. We also had record levels of SIP inflows, which was above 26,600 crores in the month of May. So SIP numbers have hit record high levels also. But largely, this was the news that made headlines from my end. Kanishka, tell me, what did you pick up?
That's right. It's been a week of mixed cues and shifting sentiment, especially on the street. Now, the tragic Air India crash in Ahmedabad that happened yesterday, that cast a shadow over aviation stocks in trade today. Now, with Prime Minister Modi personally taking stock of the situation, triggering some broader risk aversion in that space that has happened in the aviation space. If you look at particular stocks that saw a move today, Indigo down almost 4% in trade today. SpiceJet, that saw a downtick of almost 2% today. Meanwhile, this week, gold loan financiers and also microfinance stocks, they saw some strong momentum during the week after RBI eased operational norms last week in the RBI policy action that boosted sentiment across NBFCs. Other than that, in terms of macro, we had the World Bank, which has retained its India FY26 GDP forecast at 6.3%, reinforcing the confidence in the country's growth outlook going forward in the fiscal year, even as May IPM data that came in at the slowest pace in 7 quarters, raising some concerns on the pharma sector demand end. Among laggards, we had United Spirits and Allied Blenders that slipped after Maharashtra hiked excise duty impacting liquor stocks. And on the global front, Brent crude, of course, is in focus today. It's around that $74 per barrel mark, reacting to the rising geopolitical tensions, especially in Iran and Israel, which is keeping energy-sensitive stocks under the radar. Well, that's a snapshot of the week. But to discuss these details in further, to discuss this further and the cues to watch out for next week, we are now joined by market expert Sunil Subramaniam, and also on the technicals we have Rajesh Palviya, who's joining us. He's the head of technicals and derivative research at Axis Securities. Thank you so much, gentlemen, for joining us this afternoon. Now, Sunil, let me start with you. Now, despite starting this week on a positive note, the markets have seen a lot of profit booking this week. We've ended just above the 24,700 mark on the Nifty, despite scaling 25,200 during the week. So, to what extent is this a reflection of, global geopolitical tensions versus domestic factors?
I think it's entirely global geopolitical tensions. If you take away today's market movement and do it as of yesterday, it'll paint a very different picture. So clearly today's strong reaction to the global political Israel attack on Iran has wiped out a lot of gains, and naturally there have been profit booking because FIIs who've come in fairly strongly over the last few weeks, I think, have been booking profits there. DIs, I think, are continuing to remain buyers, but in a market like today, which has been under severe pressure because of geopolitics, even DIs would have stayed cautious and they stepped in to buy in later in the day. So the markets obviously recovered from the start to close, and they have been waiting for the correction to buy in. So that's why you see net a very negative picture. But I think DI flows continue to be strong, as you mentioned, the SIP book also coming in very strong, and almost 20,000 crores of pure equity funds, plus another 5,000 crores in the hybrid category. So about 24,000 crores of additional cash has come in the hands of just mutual fund managers. So I see that in the coming week, while because of the geopolitics continuing, there will be continued volatility. You will find buying support on specific sectors and stocks from the domestic fund managers. So I see that this next week will continue to be volatile, but perhaps not as volatile as this week, because I see fund managers stepping in to buy selectively.
All right, Rajesh, let me come to you then. Tell us, this week Nifty hit its 3-week low intraday. From here on, what are the levels to watch out for really? And as far as Nifty is concerned, and Nifty Bank also, we saw Nifty Bank also reeling under pressure today.
So since last 4 weeks, Nifty is consolidating in range only. 24,500 on the downside and 25,100, 200 is the upper band for this consolidation. Again, in every week, we have tested both the levels during the volatility which we have witnessed in last couple of weeks. Again, now Nifty slipped below to 20-day moving average. Nifty has broken the major put-based concentration wall at 24,800. So I think if it's remain below to 24,800, we might see Nifty to consolidate at lower band like 24,400 to 24,800 would be the range for Nifty in the coming week. If Nifty at all crosses about 24,800, 850 zone, then we could see some bit of short covering to trigger in Nifty trades, and then this pullback can extend further towards 25,000. But overall, 25,000 may act as a steep resistance for any pullback in the near-term perspective. Volatility is going to remain in the market as in last the today's session as well as the previous day was also witnessing the same kind of behavior. So I think we may see a volatile trading sessions going forward for next couple of days. Bank Nifty is a little underperforming indices in this week, and Bank Nifty has broken the important support area of 56,000. So I think if it's remain below to 56,000, I think the range for the Bank Nifty for coming week would be 55,000 to 56,000, and bias would be slightly on the bearish side for Bank Nifty until the Bank Nifty not crosses above 56,000 level. Most of the gain which we have witnessed post RBI policy is almost gave up by the Bank Nifty now. And now Bank Nifty is trading near to the critical support area of 55,500. So any move below 55,500 may attract more supply pressure, and then possible down move can extend to 55,000 for Bank Nifty.
Okay, thank you, Rajesh, for that view. Now coming to you, Sunil, I want to talk to you about gold as well. Commodities have been the focus today. Now gold, it gained about 1% today. It has crossed that 34,020 level mark today. It's the third day of gains that coming in for the yellow metal. In fact, in 2025, it has seen gains of about 28%. That is in 2025. So from from here on, against the backdrop of, the Iran and Israel tensions especially, which has, led to a rise in demand for safe haven, where do you expect the yellow metal headed, going forward?
So I think that definitely over the next year, I see a double-digit return coming in from gold. And the reason being that not only that geopolitical tensions are a positive for gold, but I also see that given the pressure on the US economy, right, I see that the combination of inflation there and slowing growth will lead to a Fed rate cut sometime in the near future in the year. And I see at least 1 or 2 rate cuts from Fed coming out by the end of the year. So even the rate cuts are a favorable thing for gold because a weakening dollar means money shifts into gold. So overall, a continuing geopolitical uncertain scenario plus a weakening dollar is a big positive for gold, but not to expect the kind of 25-28% returns going forward because already there's been a lot of rise. But definitely, I'll see that about a double-digit return over the next year from gold, and I would say that a 10 to 15% allocation in portfolios for gold would be a healthy thing to keep.
All right, Mr. Palviya, let me come to you again about, we spoke about gold, but the other prices that have been spiking up is the Brent crude that is up almost 12% in this week. In fact, it is sitting on $73 a barrel. Now, of course, on the back of the heightened geopolitical tensions, the supply concerns and so on. There's a note by JP Morgan also that says that, crude could touch $130 a barrel in worst case scenario. Do you concur? And what is your view on crude? And of course, then therefore, the sectors that are crude sensitive?
So I think because of this geopolitical tension, yes, there is a spike in crude prices. But looking at the weekly as well as the monthly setup on the technical side, I think $76 to $78 is the immediate hurdle for the crude. If at all crude manages to cross above $78 and sustain above those levels, then yes, maybe this spike can extend further, and then 86 to 88 would be the next target. But I think it's all depend on what kind of the escalation we are going to have in coming days. That's the major driver for this crude oil prices. But on the downside, 68 is the immediate support area. If it's a break below 68, then yes, unwinding trade would take place in crude prices. But till it is trading above $68, $69, I think there is a possibility that again the crude can move back to the 78 level, and if it crosses 78, 86 to 88 would be the next target for crude.
Let me come to you as well and talk about crude and how do you see crude movements going ahead?
I think today was a knee-jerk reaction to the fact of attack on Iran and possible Iran counter-attack on Israel, and the fact that Iran may do something on the Straits of Hormuz to prevent oil tankers from passing through. I think it's a cumulative impact of the threat of that. But I think, as always, we see the bark is always worse than the bite. So I think maybe the crude may go up a little more in the next week or so. But after that, I see crude back easing because such a sharp spike in crude could lead to a further global growth slowdown. And if that happens, a demand for crude could come down. And also see OPEC and Saudi Arabia and the US stepping up their production and supply of crude to bring the prices down. So I'm not on the view that crude is going to rush past the 80-85 mark. On the contrary, after hanging around this mid-70s level for some time, I expect it to ease back to the mid-60s to late 60s by in about 2 weeks' time. So I think that this is a knee-jerk, like I repeat, a knee-jerk reaction to the tension and the fear, the psychosis that's built in. But on an overall demand-supply situation, you see, a slowing world will mean that supply demand for crude is not going to be that strong, and this augurs well for a slightly reduction in price from today's spikes in about a couple of weeks' time. So I'm of the opposite view that I don't see crude really shooting up to whatever 100, 135 kind of levels. The world scenario of development and growth is not at that levels where this kind of a crude price can be sustained.
Okay. So, this kind of crude level can't be sustained is the view coming in from you, Sunil. But, when you look at some of the stocks that are, allied with this, with crude, for instance, of course, oil producers in India, OMCs, paints, chemicals, aviation stocks as well. How do you see, these sectors reacting? What kind of impact do you see on these sectors go in the coming months, given, of course, we have seen the reaction today and it's been quite massive, in aviation stocks, 4% of cuts coming in on Indigo, SpiceJet down 2%, oil, also major reactions we are seeing there. So do you think this reaction is going to continue? If you could help us understand which sector and how particularly those sectors are going to be impacted?
View of crude as a spike staying high for level and then dropping down. Then what happens is, first I'll keep the OMCs separate because OMCs are highly regulated, right? So when the government, the drop in crude prices also, the government actually increased the excise duty, didn't pass on the drop to the public. So the government controls the OMCs in terms of the excise duty, and so they could provide relief to the OMCs by reducing the excise duty if crude spikes or whatever, to keep the balance right. So OMCs are a highly regulatory thing. We will wait for the government reaction there, and so I would say wait and watch that. But anything else which uses crude, if I stick to my stand that crude will ultimately ease down, and when the global geopolitical tension ease, I think these drop in prices of the aviation and all those which are using crude as a raw material, like paints you mentioned and others, I think that it's a good time to buy there. Because I think that is again a knee-jerk reaction to the geopolitical tension that's happening. And the case of airlines, it's also because of the Ahmedabad crash that's happening. So these are not justified based on the earnings outlook. So I think that any corrections here are a good step to buy, and I would expect fund managers to start buying those. So today was a knee-jerk, and I think next week you should see things stabilize. So actually, like I said, if I stick to my view that I see crude staying high but then finally dropping, these are probably good times to buy into this, because any corrections there are going to give you an additional cushion.
Rajesh, okay, let me come to you about the next sector that is in focus on the back of a re-rating that we see coming through is Nifty IT, that has been, in the spotlight, has been probably the sector that has, outperformed the rest, and also, post crossing that 100 DMA, it has been doing well. Also, in terms of valuation, there's now valuation comfort as far as Nifty IT is concerned. What's your view?
I think looking at the overall scenario for Nifty IT index, Nifty IT is now, witnessing some bit of, supply pressure at 50% retracement of entire fall for the Nifty IT, which we have seen from the level of 46,000 to 31,000 level, which is placed at 38,500 kind of zone, 50% retracement. So I think once the Nifty IT manages to cross about 38,500 on a weekly closing basis, so yes, there could be a chance that we may see a some uptick in most of the Nifty stock IT stocks. Most of the large cap IT stocks are after railing are now consolidating. Mid cap IT stocks are showing a little better compared to the large cap IT stocks. So I think our focus is to track 38,500 level. This level is very important for Nifty IT index to cross. If it crosses, then next target for Nifty IT index would be around 39,000, 39,200. Some of the stocks where we are focusing on large cap IT, that is Infosys, is looking attractive. The way stock is now trading above to 20-day moving average, I think if it's manages to cross about 1630, 1640 mark, I think here we could see a good rally to unfold towards 1700. So buy and accumulate would be the strategy. On the downside, 1570 would be the level where one can place stop loss. And another stock from large cap IT would be Tech Mahindra. This stock is also looking very promising. Stock is comfortably holding about to 200-day moving average. So I think Tech Mahindra can extend its gain. 1700 would be the next target for Tech Mahindra. One can buy and accumulate with stop loss of 1630. And from mid cap IT space, I think Coforge would be our first choice to look at, because Coforge, the way stock has shown a rally and now consolidating. This stock has potential to move back above 1850, 1900 kind of level. So 1740 would be the stop loss to buy and accumulate Coforge from mid-cap IT space.
Okay, Rajesh, that's the view coming in on the IT pack. But given the kind of market setup that we have today, the downtrend that we saw, what would be your top recommendations today? Do you still have buy calls for us?
Yeah, I have two buy calls in this kind of market also, because the sector where strength is still there, like BFSI, from BFSI sector, some of the pockets are showing good strength. So SBI card is looking very promising. The way stock managed to give breakout of falling trend line on a daily as well as on the weekly chart. So we believe that SBI card can outperform in this volatile market. 1040 where we are projecting the target. One can buy and accumulate this stock with stop loss of 985. Another stock is from the pharma space, that is Stride Pharma. The ticker is STAR. This stock is also enjoying all-time high trajectory. The way stock has managed to give breakout of brief consolidation on the near-term chart, I think this stock may extend its gain in this all-time high trajectory. 925 to 930 would be the next target. Buy and accumulate would be the strategy with stop loss of 865.
And SBI cards, that's the buy call coming in. But Rajesh and Mr. Subramaniam, thank you so much for taking the time out and joining us. We'll let you go on that note. But time for now, the headlines so that